Hey, what's up, YouTube? I hope you guys are actually doing great. As you saw the title, this video that I'm making is about common mistakes that we as forex traders actually make. And to be honest, I feel like we're still going to continue making these mistakes because we are people after all. You know, people, we have emotions, and emotions include human behavior. So I feel like we are still going to make these mistakes no matter like how good you are. You can be in seven figure trader, six figure trader, five figure trader. You can be as good as you can be. You can be an eight figure trader and still make these mistakes. And it's not because you are you've lost your way in the market, or you've lost. No, is those mistakes that we are going to continuously keep on doing. But what you can do is that you can manage those mistakes so that you can make less of those mistakes. And to be honest, we have mistakes. What can I say? The first one that I can actually say is that a lack of a trading plan. You know, most of us as traders, we actually underestimate the power of a trading plan. And the trading plan is a very, 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 very effective tool that you can apply to your trading, routine. A trading plan is actually is super, 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 super important, because a trading plan actually, a trading plan, it actually gives you that solid, foundation, of your strategy. You enter the markets knowing, what to do and how to do this. Things like entering, entering and exiting, like those are the things that you can actually note down in your trading plan. A trading plan is simply what I can say. A trading plan, it's simply writing down, actually journaling down your trades, how you're going to enter trades, the risk, the exit, the strategy. How are you going to actually manage the whole trade? How are you going to manage the whole trade as a whole? So I feel like a trading plan is super important. So me, I just journal down all my things on my trading plan. I journal, my trades, how did this actually day go by, what happened, what did I actually learn about this trade that I actually saw happening, and I ended up losing money, but the trade still went my way. So I journal those things down in my trading plan. So it's simple. You can just get yourself a trading this book, little book, so that you just journal down your trades. So that's what I can just tell you about the trading plan. But this is super important, guys, because you can go back, look to where you had your base trades, and actually see what you did before. Yeah, and you actually can actually see if, like, let's say today you took a loss. um you can actually review on it, on what did I actually do wrong. Because at the end of the day, this helps you review all your trades, review all of the work that you've been putting in. So a trading plan is super important. So that's the number one mistake that traders make. Trading plan, they don't have a trading plan. There's no trading plan, there's no nothing. People are just going to the markets because they just feel like, what, I'm going to the market. Just because candlesticks are moving doesn't mean that you actually have to enter the market just because of when you just see candlesticks. Yes, they will move, don't just never stop moving. Candlesticks, they will keep on moving, like they will, but without a trading plan, that's just useless, because you just basically actually, giving your money away, without even having to put it on a fight. At least put on a fight, for your money, you know so that, what, when I actually make money here, I will actually make money. And if I lose money, actually, I know, okay, cool, I lost money, but I know what I did on my trading plan. It can happen. Let's just say you make a trading plan, everything you got it down in, yeah, you can take a loss. These are the markets. You can be actually 100% correct in the markets. It happens, so don't actually take the blame and you just beat yourself up about that. So that's the number one thing. The trading plan is super important, guys. So it's super important. I don't know how many books I've actually you know wrote them to the very last page. So the trading plan is super effective, guys. It will help you in the long term, guys. Trust me, like I know the power of a trading plan. So number two, over trading. Over trading, over trading, guys. Over trading, guys. That's that's a virus. That's a virus. That's not good. Over trading, guys. Yo, it's bad. Trust me, over trading is bad. Cause the thing with over trading is that you will make money today. You know, you will make money today. Let's say you just made 3,000 USD. You made 3,000 USD today, and you actually trade again on Tuesday. Let's say you trade on Monday, you make money. Trade on Tuesday, you make money. Trade on Wednesday, you make money. Trade on come Thursday, you start to see yourself going down. Your account actually going down. Friday, maybe you pick up Nyana and you see a account going down. So guys, like over trading, that's risky business. Like that's risky business. I won't even lie to you guys. Like over trading is risky business, because you are entering, you are exiting frequently, getting in and out of the market. So that's actually also bad for you, because remember, um you also get brain fatigue, get brain fatigue, because you're constantly on the charts. Like I'm not saying that that's a bad thing, because there are some of people that actually like I want to say obsessed with trading. I am obsessed with trading. I won't even lie on that. I'm obsessed with trade, but I know when to stop trading. I actually know when to stop trading. So we just have to know when to stop. You just have to know when to stop. So I feel like when you know when to stop, I feel like things are actually going to be much easier for you guys. So guys, over trading, that's um that's a big factor in this over trading. Let's not over trade, guys. That's bad, because you can make a meal today and lose it tomorrow, because you don't actually don't know when to get out of the markets. Like the market is giving you money, so why are you still wanting to take more? So whatever the market is giving you, just take that, then you'll see what actually happens. So yeah. So the number three mistake that I will say is the risk management. To be honest, when I first heard about risk management, I was just like, you know what, I'm not going to do this. I'm not going to, I'm not going to follow this thing, man. It's just a lot of things. I want money. So to be honest, that actually, showed me flames. That showed me that it taught me a lesson. Risk management taught me a lesson. Cause as traders, what, losing money, that's something that it's not nice. Losing money is not nice. So people ignore risk management. So to be honest, for me, what I will say about risk management is that risk management, to be honest, guys, is not something that I can say it's rocket science. Or no, risk management is essentially putting your stop loss, your TP, like managing your risk, managing your risk, making sure that the trades that you are actually entering, whenever they hit your stop, you are not actually, you don't actually get to blow your account. The account doesn't get blown. Like you're still in the markets. Like that's what risk management is going to help you with. It's going to help you, to be able to know your risk, to know, okay, cool, if this happens, I know on the good side. So like with risk management, trust me, like your account is going to be alive for a very long time. Your account is going to be alive for some time, if actually if it's small, or it's not big enough. But like if your account is actually like bigger, let's just say you have a $10 account, but you're actually treating your risk right. Trust me, like even though you take a loss, like if your risk is right, trust me, you're still going to trade the account nicely. So let's just say you have a hundred dollar account, like your account is going to survive as long as you're using risk management, trust me. So risk management, guys, is essentially like using your stop loss. Like take advantage, guys. Like that's something that like like they gave you the tool, like you know what, you can risk your money, but you can help you, like they're actually saying we can help you, protect the money. So use this stop loss, guys. Super important tool, super effective. It's a very effective stop loss. So guys, let's not ignore stop loss. I know in my days I used to ignore stop losses, so I blew account. So when I started using stop loss, I started seeing myself trading an account for at least 2 to 3 weeks, a month, like those things. Like when I was starting, when I was not using stop loss, when I was just entering orders, oh dog, dog, if I took a loss, that's a blown account. So that was actually bad for me, it was bad, like guys, it was bad. So the common mistake number 4 that I'm gonna actually point out. So the common number common mistake number 3 was risk management. So overall of this risk management risk management is that, guys, let's use a stop loss. Like let's like normalize using a stop loss. Like normalize. It's not because you are stupid, you are, no, you are protecting your money. Like you know what, because you can actually be 100% correct in the markets all the time. Like I also wish I had that hack where I was actually 100% on all my trades. I wish I had that. But you know what, like it's not possible, because if it was possible, all of us could have been billionaires, trillionaires, millionaires, you know, that thing. So it's not actually possible to be actually 100% correct in the market all the time. So you're going to take a loss. So a stop loss is going to help you take a minimum loss than rather blowing an account. So me, I'll rather be safe, use a stop loss, know that, okay, you know what, use my stop loss, I use my TP, when if I take a loss, I know, okay, I'm taking this amount of loss, yeah, in this I've lost out this amount of pips, yeah. So coming to number 4, I would say market analysis. Actually, I've wrote this down, for you guys. I've wrote this down, guys. Wrote this down. Like I've wrote this down. Like wrote this down. Like you know what? I feel like there are people that actually need to hear this. Also for me, cause as forex traders will always make mistakes, guys, whether we like it or we don't like it. So common mistake number 4 is neglecting market analysis, guys. You know, people don't actually want to analyze the market. People they don't want to analyze the market. People just want to get it. Like you are waking up, you're still in the bed, you're in your pajamas, then just because you woke up, you open up your phone, you go to the market. No, guys, like that's not healthy. That's not healthy. Like that's not healthy. Like when you analyze the market, because remember, you are aiming to make money. You don't want to make money. You want to make money. Like no matter how experienced you are, like analyzing market analysis is very important. Like actually analyzing the markets. Like I'm not saying analyzing the 5 minute, the 10 minute, the 15, the 30, whatsoever. Like you got to start from 6 months or yeah, at least five. Like you need to like actually like do a top down like every day. Like you need to actually go to the bigger time frames, like actually analyze the market. Like so people don't want to do that. They just want to go to the daily time frame, analyze, and that's it for them. No, like the weekly is still important, the monthly is still important, the 3 months is still important, the 6 months is still important, because you will have a clear picture, I will have the clear picture of what's really happening. So let's normalize analyzing the market. Like neglecting market analysis, I feel like oh that's a pretty fast downfall that you will ever ever meet in the market. So just imagine getting to a trade, you don't even know where the direction of the market is going. Like you're just doing guesswork, you know. That's not good, man. That's not good. So let's just normalize, analyzing the market. I feel like if we do that, I feel like we're going to be at least ahead of other traders, analyzing the market every day. So common mistake number 5, overconfidence. Overconfidence, I feel like sometimes overconfidence is a pitfall for us, you know. Overconfidence, guys, overconfidence. Like I know that confidence is key, like you need confidence, but sometimes in the market you need to level your confidence. I don't know if you guys like actually understand what I'm trying to say, but you need to level your confidence. Like you need to actually know, okay, cool, I can be confident there, but this is where I need to actually start thinking about my confidence. you know I know, like, you can have like a powerful strategy that actually okay, cool, if it's I'm at this edge, if I have this edge, I'm actually going to make this amount of money, and just your confidence is just up. So it's good, yeah, but you just need to to balance it a little bit, make sure that you know where to actually level yourself. So I feel like if you do that, your confidence is going to work out for you. But don't be overconfident, don't be overconfident with the market, because the market, trust me, the market is very cruel, guys, very cruel. So yeah, yeah, the last one, the number six, the sixth one, which is lack of discipline, you know but lack of discipline, guys, lack of discipline. In this field, you have to be disciplined. Like, trust me, you have to be disciplined. To be honest, me, I'm not 100% disciplined. I will say that, I'm not 100% disciplined in the markets, because um I'm not I'm not disciplined in the market. That's one thing I will say. But I feel like those things are the things that they make us lose man, lack of discipline. Like, imagine you wake up, you make a trading plan, boom, only to find out that you're not going to even follow it. Like, that's not being disciplined, because you woke up, you wrote the trading plan, but you're not following it. You're just doing whatever you want, meaning that this is useless. you know Useless. So you need to have discipline. Discipline, you need to have discipline. I don't even lie, you need to have discipline when it comes to the market. Taking a loss, after taking a loss, you come back to the trade, you take more trades. Whereas you say trading plan, okay, cool, if I take this loss, I'm out of the market. But then you take losses, then you in time of trade, like you are getting lack of discipline. You are no longer analyzing the market, but you just looking, doing guesswork. Like this one is tough, guys. It's tough because we are human beings after all, we are people. So I feel like there's a certain time that people actually, take discipline serious. I feel like that's when actually people lose money, like, or take losses after losses, losses after losses. I feel like that's when people actually want to get their discipline serious. They want to get more serious. I feel like people are actually not taking trades or trading that seriously. So this is a field, guys, where you need to be disciplined because there's a lot of aspects that you need to cover. There are a lot of aspects that you need to cover. There's a lot of management that does need to be done. You need to have management skills. So how can you have management skills if you don't have discipline? So I know some of you that are watching they have discipline, but sometimes tend to break, you know. But it happens, man. Don't beat yourself about it, man. It happens. We are people after all, we make these mistakes. So I said mistake number one is lack of a trading plan. Number two, I said over risking, over trading. Number three, ignoring risk management. Number four, neglecting market analysis. Number five, overconfidence. And number six, lack of discipline, guys. Yeah. Then the bonus one is emotional trading. You know, emotional trading, guys. Emotional trading, guys. Like I know, like sometimes like there are some trades that actually you are not actually that confident. Like you are scared. You know, you just end up cutting your losses, your profits short. You know, you cut the losses short or late. You know, emotional trading, guys. I feel like when you get to the market, you just have to leave your heart outside. When you get to the market, you like your heart must, I don't know, you must just switch off. Just all emotions, and just actually trade your plan. Like I feel like trading your plan is what's going to actually help you actually get good at this, actually actually get good at this. So emotional trading, guys, is something, it's another factor. To be honest with you, it's another factor because me as a person, I'm different, and you as you're watching, you are different also, so we not actually the same. Maybe I get happy fast, maybe I get happy fast and I get sad fast. You see, maybe you don't, you get a happy you get happy fast, but you don't actually get sad fast. Like we are different. Like, maybe me, small things anger me, you have a big heart, you don't actually get, like we are different. Like we are not the same thing, all of us. So whatever that I will say about emotional trading, I feel like that's a factor that any individual has to deal with. Like I feel like that's something that you just have to do an intro inspection to actually figure out what's actually going to work out for you. Fear is something that the next person can actually take it out from you or teach you not to be how to be fearless. No, it's something that you actually have to be that you actually have to actually do yourself and actually figure it out yourself, that you don't actually need somebody else to show you how to be fearless. Something that you have to do on your own. Greed, man, greed. These are the things that there's no person that's gonna actually teach you, but these are the things that you actually need to take accountability for them. You need to actually work on yourself, to actually work on them. So I feel like emotional trading, that's another factor, that's something else, that's something else that nobody is going to teach you. Yeah, so that was the bonus one, the number seven one, emotional trading. So let's not trade based on how we feel. Let's trade based on what we see. You know, trading on based on how you feel, it's actually bad. Let's say you there's a breakup between you and your girlfriend or you and your wife. So are you going? Because obviously that breakup is going to actually affect you. So are you going to say? Are you going to trade the way you are feeling because of the breakup? Because obviously you're going to be feeling sad. So you don't want to come into the market sad, think you're going to lose money. Like trust me, that's something I know you're going to lose money. So if you are trading based on what you see on the market, trust me, no matter how angry or no matter how what, because you're not trading based on your emotions, you're trading on what you see. So I feel like that's one way to beat the emotional trading. Just trade what you see in the market. Like if your analysis tell you this, trade that. Don't trade on how I feel happy, I'm going to buy the market. No, I feel no. You just have to analyze the market and trade on what you actually see. Take trades that you actually see. Okay, because I'm taking this trade because I see this, on the market. You know, yeah. So those are the mistakes that we as traders we make, and out of all of them, I feel like there's one, two you're still going to make. Even myself, I still make them. I'm not perfect. I'm a person. So, the good thing about mistakes though is that we learn from our mistakes, and making mistakes. I feel like it's a good thing. Like mistakes are good. You know, I don't know if like you actually get my point, but mistakes are good. Mistakes are good for you. Like you need mistakes in your life. You need to make mistakes, so that you learn. So how can you learn if you are not actually making mistakes? So I feel like mistakes are very important in your life, because you get to learn from mistakes. You get to learn every day from mistakes. So but the good thing about learning from mistakes is knowing that, what, I'm not going to make that same mistake again. you know if I make it, I know that I will not make the same mistake the same way I did last time. It will be the same mistake, but it will be much, it will be much looked into, much, the better experience, better knowledge, better, will be bit wiser to the mistake. So yeah, guys, mistakes are good for learning, but like not learning from mistake is bad. If you're not learning from mistake, that's bad. Yeah. So those are the mistakes that us as forex traders always make. So um thank you guys. If you guys watched the whole video, thank you. I hope you guys actually have learned a lot. For that one person who actually reached this part of the video, I feel like if you really listen to what I was actually saying from the beginning, I hope you actually find a lot of knowledge, because I um I do this with passion, I do this with love. So if you really watch this whole video, I just hope that you found value. We as traders we make mistakes, man. Like we make mistakes, and you will always make mistakes. So don't beat up yourself about it. um it happens. We are in the financial markets, guys. Yeah. So don't forget the trading plan. So that's all I had today. I just hope you guys enjoyed the video and actually found value on this video. See you on the next side.